Welcome to I don't remember what day it is, but welcome to our show for the April 21st day of trading. I'm Ming, this is Z, and we're gonna, do a show today where we're gonna talk about question. Why am I summarizing the whole thing? Let's get into it. Z, how did your options fare yesterday?
Yesterday, well, first let me give you a bit of a prediction. I think that I'm going to be slightly up today. I think I'm going to be around the 800 to 850 range for the total balance, if I'm not wrong. We'll see. The only indicator I have of this is when I went to bed around 11, and so I looked at the balance that I had, and it seemed to be moving in that direction. I think SPY probably stayed about the same level all of yesterday, and so I think I'm just right in that same range. I haven't looked at the market and I haven't looked at my portfolio since I went to bed. So let's take a look.
Question before you show: are you equally invested in puts and calls? Are you more on the leaning on one side?
No, I'm much more on puts, but only the things I bought a long time ago. So like I purchased here, and SPY has gone up. And I think and then when I purchased the call put spread was right about here.
Okay.
And so I have one put that I think is performing well, but SPY's come down here, which is great for that one put. But these other ones that I purchased, I think they've also increased in value just a little bit from what they were like a couple of days ago, but nowhere close to being like break even on cost. So okay. I'm just like not even really thinking about those. So I have about 5 of those that are expiring on the 15th of May that I purchased a long time ago. So I think that'll boost up my portfolio value a bit if SPY falls, but other than that, yeah.
Great, let's see.
Let's take a look. Oh, ouch. I'm at $732.80. So my value actually went down from 760 down to 732. Ouch. And really, this is because Theta kills me, and SPY basically, I guess it did go down a bit after hours. It went up, so it was down 3%, but I also lost 3% of Theta value. So.
Really? Wait, when do your options expire? It's still quite a while.
May 15th.
Wow. And the effective Theta still got you there, huh?
I think so. Like one of my puts has gone up in value for sure. I bought it for 67 cents, but the current price is 52 for that SPY 200 put for May 15th. So it hasn't crossed over in the profitable range because SPY hasn't gone down enough, and I think I've lost value off that call that was going up. So I'm in that dead range now again. So because it went up by SPY went up by 3%, went down by 3%. I'm stuck. If it doesn't go down into the 260 range, it's not going to pay out for me at all.
I see. It's tough. So basically, right now, your holdings, most of it is in SPY puts and calls, and they need to move drastically one direction for you to make money.
Yes.
Is that right?
So I have, let me take a quick look. I have 5 puts, one of those being the one I bought recently, and 4 that I had bought a long time ago. And then I have...
What's the price on those?
Yeah, the strike price on those is 200, 205, and 210.
Anything higher is too expensive, huh? You
Yeah.
have to go way out. Yeah.
Correct. I think there's a lot of sentiment that the market will come down, and so these are very far out of the money. Whereas the $310 call, I bought 2 of those, and that was the same price as buying 1 of the puts.
Any other moves? Did you make any moves last night?
I made no moves, and because I looked at this and things were just sliding sideways pretty much during the whole day. The only thing that made a little bit of money for me was this Gilead put.
Oh, good.
And so Gilead also went down 3%, say along with SPY, along with the market. And so that value shot up 27% yesterday.
Amazing.
But the current value is only $84. I bought it for 60. So it's gone up $24, which is great. But that doesn't offset my big investment into the SPY puts and calls.
Okay, well, I'm sure you'll break out of the $1,000 barrier soon. And as soon as
I hope
part
so.
of me, the competitive side of me is like, okay, good, Z's still down there, But
It's not
other
much of
part
a
of
competition when you're 4 times ahead. And maybe let's see where you are today and see if you are 4 times ahead.
I think that I'm under 4,000 this time for sure.
Really? You think?
Well, I won't
That's
say
your-
for sure. I definitely lost a bit yesterday. But I do believe, hopefully, fingers crossed, I am still at least 4 times. That would be 2,800. So let's see what happened. Then I'll tell you what I did. I actually made some moves.
Oh, wow. Okay.
You ready for it?
Oh, no.
Okay, I'm at 4.464.
Wow, actually really good. You almost no change from yesterday. Well, down $200, right?
Yeah, I did do some moves. Want to hear them?
Yes, absolutely.
So last night, 9:30 strikes, and I'm like, I'm pumped. I'm ready to start doing some things, right? So first of all, I spend the first 10, 15 minutes trying to sell my Zoom.
Yes.
While it hadn't crashed yet. It actually started off the day at like 3% up. So I managed to sell it at a loss. I sold it at a loss. I bought it for 23.10. I sold it for 21.3. So
did you sell all of it or just one of the options?
One.
Okay.
I'm still holding to the other one, but that freed up about 2K for me to play with.
Yes.
And then down on my list of things to do, I had number 2, buy a SPY put. Number 3, buy Amazon. Number 4, buy Shopify. Number 5, buy Facebook. And try not to spend more than $1,000 total, because now I want to keep at least $1,000
Yes.
cash. So I immediately looked at SPY and I was like, oh my goodness, like it's all so expensive.
It's so expensive.
I cannot afford buying anything except that in the low 200s. Do you know what I mean?
Yeah.
So I was like, screw that. So I spent the rest of the day, the next 10, 20 minutes looking at Amazon and Shopify. Even more expensive than SPY. Ridiculous.
How much per contract?
Nothing.
And how far out are you trying to buy?
Okay, so that doesn't matter. Forget about the time. There's so many dimensions here. But then let's just say that on average, from 1 week, 2 weeks to a month out, any option price in the range of say 10% and above out of the money, meaning say figuratively speaking, the stock price is 300.
Yeah.
Anything 330 and above already was $2,000, $1,000,
Wow.
$2,000.
Okay.
You can't get, no, actually way more than that. Way more, the thousands. The only way that I could buy anything under 1,000 is if I really push the extreme limit. Let's say Amazon. I could only buy a call on Amazon within the couple $100 range if I bought it for at the strike price of $3,500 within a month.
Wow.
It's so unaffordable, know. So I was like, screw this, I'm not gonna do any of this. So I decided to make a risky move. My first move was I decided to buy a Facebook call.
Okay. Yeah.
Yeah. So I bought Facebook expiring in 10 days at a strike price of 185.
Okay. What is it currently at?
I believe it dropped during the day, but in the after hours, it feeling okay about this one. Okay, so it dropped down to 170. It went down 4%, but after hours it climbed to 175.
Oh wow.
So yeah, so 185 minus 175. I believe it wasn't too much. It's 185 minus 1. 5%. I needed to climb 5%. between now and after earnings. So earnings comes out on April 29th. So my bet is that hopefully, like over the next 7 days, it increases in price, or that it surprises with its earnings. I know everyone's expecting pretty dismal results from Facebook.
Right.
I couldn't afford Amazon or Shopify, but hopefully Facebook, I could capture some of that e-commerce volume that's going on.
Well, there's two aspects here too, right? Because earnings is coming out, you have an increase in volatility kind of no matter what, is the hope.
Yeah.
And even better if it rises in price a little. What is your price that you're going to sell at?
I don't have a price I'm going to sell at, but I bought it at $564. So I spent $564.
Okay.
No, sorry. I bought 2 contracts at $268. So, I don't know. I don't know how oil is going to affect all this. I'm ready. I'm going to be watching this very intently. If there's a little bit of gain, like 50% gain locked in, I think I'll sell. This is a scary time kind of, right? It's who knows what the effect of oil is. In fact, maybe it'll be interesting to talk about oil a little bit later.
Yeah, that'd be great.
And then the last thing was I bought a SPY put.
Oh, you did? What's your strike price?
I got, I set my limit price and I couldn't ever get it. I couldn't get it. Like, I just set too low. So eventually I just bought at market price.
Oh no. Okay. What'd you pay? What's
$564.
Okay.
So let me see what it is. I don't remember exactly what kind of SPY put I bought. 240 SPY put, May 29th.
Actually, it's pretty good price and a pretty good date. Well, you must have bought after it was already down. So I don't think you've made a return on that yet.
Yeah, no, not too much. Man, but it's just crazy how this works. Like, we have all these puts expiring on April 20th, and then April 21st it goes down. It's like excruciating.
Yeah, I could have sold. Well, actually, I don't think any of mine would have sold though, because they're so far out of the money, and that's really the big problem. It's because the probability of the market dropping, say, 30% again, is really low, and becomes much lower. Like that implied volatility, or just the probability that it'll go that low, just goes down over time, right?
Yeah.
If it's not moving in that direction already, the chances of it getting to that range is just very low. So I think you picked a really good price and a really good date, because there's a very good chance that this put starts to get closer and closer. Like SPY going down $20 from, say, 280, or what is it at now? I can't remember. But getting in the 250 range is very likely. So in the next month and a half.
Yeah, we'll see. To me, this is a race against time, and whether the time works out. Like if the effects of the oil, if the market stays low today because of the oil scare, I'm gonna sell the SPY put. You know what I mean? Like, and then I need it to climb in time for Facebook. So short term I'm bullish, long term can be a little bit more bearish. I'm not happy with the price I paid for the SPY put, because I was just like, oh my goodness, I need a SPY put, I need a SPY put, I need a SPY put, and then I just settle for market price.
Right.
Which is the worst price I'm paying. But yeah, so those are my moves. I didn't touch Amazon or Shopify, but we'll see. So the next 10 days, I'll be looking at it quite actively.
Yeah, I'm also looking at it quite actively because, well, we have some stuff expiring on May 15th that we need to get rid of.
Yeah.
I think there'll continue to have like a lot of volatility in some individual stocks, but I'm just not sure where the entire market sentiment is going to go.
Yeah. Actually, I'm curious, right? Could we talk a little bit about oil? Like, why does it affect everything?
Well, I mean, oil you use it for everything. It really is equivalent to energy, right? It's the amount of energy that you have in a economy or a nation for doing things. And it's almost equivalent. I mean, like solar power, other modes of getting stuff around, moving goods, like services, moving people around and stuff, they only account for like 5-7% of the entire energy needed to do that. So oil dipping like this means that there's just a huge oversupply of oil right now. And there's a big trade war, but oil war going on between Russia, Saudi, US, and Mexico are involved in this as well, right? And I did a little bit of reading on oil, not nearly enough, but the negative price in oil actually only affects the future. And this is the end of May contracts. So a company can buy barrels of oil for end of May, but actually June, the contracts are still in the 20s.
Oh.
Right. So this is like a day-by-day futures trading of oil. So like in end of May, what's really happening is the commodities traders are buying these contracts to buy and sell like real oil barrels. And if they have a contract to receive it, then they actually have to receive it. And the real issue is a lot of these guys are set to receive it at the end of May. And what they want to do is buy the contract and then sell the contract to the person that's actually going to receive it. And they just hold it for a little bit of time. And what's happening is that they have the contract and they don't have any storage facilities because they're just a commodities trader. They don't have warehouses, they don't have oil tanks. Like, they will have to physically receive these goods if they have that contract. And they're saying, I cannot receive this good. I will pay you money to take this off my hands because otherwise I must fulfill the contract. Right?
Otherwise what?
They must fulfill the contract. So what they're doing is they're paying oil refineries or storage facilities, etc., to take that contract off their hands because they literally cannot do it. And that's why it dipped to negative. And the interesting thing to note here is it's only negative for a very small window in May, and then other dates it's positive.
But I think the question that I also had was, though, like, why is the decline in oil prices shocking the rest of the economy?
Good question. I could extrapolate it a bit. I mean, this is completely conjecture, but I would think that it means that economic activity has decreased significantly. Like so significantly that people, industry, power plants, like refineries, they're not able to move their product into the hands of the people consuming it because there's no consumption happening. So it's a really strong indicator that the economy is faltering badly.
See.
And maybe that's the thing that's in people's heads.
This could be a good chance to get some more Tesla stock, right? Because when oil is cheap, Tesla is less. The value proposition of Tesla is less appealing.
Yes, actually, that's my hope as well. That Tesla stock on this news comes down a bit. But what's really going to happen is like oil prices are going to go down, maybe gas, etc. Everything is a little bit cheaper for a while. But if the economy reopens, if people go back to jobs and they start consuming in some amount, what's happening is right now the supply is going way up and you're having this supply glut. And as people use it, and the producers start producing less oil, that there's going to then be a oil shortage, probably not in the too distant future, because supply will naturally be used up and we're going to get like quite a big dip. And I would expect oil prices to like shoot up in the, say, year time horizon, like 6 months to 12 months. And hopefully it gets back up to, say, the $60 a barrel type of level, because there should be quite a big shortage as all of these oil rigs and companies are folding, they're going into bankruptcy. Big oil producers are scaling back their production like really massively. And then they don't have the ability to ramp it back up as quickly as the demand should come back. So you should see that at that point, then like Tesla stock goes up, but also oil price also goes up quite heavily. That's the conjecture, kind of the hypothesis, but that's on a 6 to 12 month time horizon. So I'm really hoping that Tesla stock comes down because there's like this oversupply, oil's cheap, energy's cheap, we don't need renewables for a little bit of time, and that should be a really great buying opportunity for Tesla.
Yeah. Cool. I think the next week is going to be really exciting for us. We're going to be watching the markets very closely.
Yeah. What are you going to do today? Do you have any ideas?
Nothing. I'm at my limit of cash. I want to keep at least $1,000. So the things I'm most ready to start trading away are the Facebook and the SPY that I just bought.
Yeah. I'm also basically at my limit.
You think today's going to open red? Or you think today's going to be red or green?
I think the sentiment is red. And I think it will, it is now kind of a very slow decline because we're not getting enough good news. But it's not going to be a precipitous decline. And I feel like it will open red. But I'm not even that excited about the I used to be very excited about a red day just a couple weeks ago. And now I'm just like, it needs to drop like 20%, otherwise I'm not excited. So I think we've gotten a lot of, what is it? We're a little bit jaded, a little bit numb to the market moves right now.
Yeah, it's probably going to open. Yeah, it's probably going to open red, and then on Thursday, Trump's going to say something, make it green.
Yeah, you think it'll go green again in the near future?
Oh yeah, I think so.
How green? Like, give it 2 weeks out. Do you think we will be green, or do you think we'll be red 2 weeks from now?
You mean from this level?
Yeah.
Up or down?
Yeah.
Definitely up. Definitely up.
That's interesting. Because I think definitely down.
Really?
Yeah.
Oh.
So unless, but you're right. Like, I'm not thinking of these external kind of things that will happen. That there'll be some new stimulus package announced, and markets will stabilize and go up. Let me think about it today, because maybe it's just my naive hope that the markets go down a bit so I can sell my puts.
Yeah, so most of your puts, I'm curious, right? So how down are you on most of the puts?
Oh,
some of the puts.
It's even painful to look at. So to give you an example, my SPY 210 expiring May 15th put. So I bought that at $701. So each contract is $7.01. And today's price is 81 cents. So I'm down total 88%. And that's pretty indicative of the other puts as well. It's about 80-90%. I'm still down on all of these. Yeah, for all the ones that I bought a while ago. Yeah.
The May 15th expiry.
Yeah.
Wow, it's so hard to play puts, huh?
Yeah, I
calls as well.
Yeah, I think just options in general, we didn't have a good grasp of option strategies 10 days ago. And so we're just we're buying market price at the sentiment of the moment, and that is the most expensive you can ever buy. It's like, the market's going down, amazing, buy puts, most expensive, most implied volatility, and everybody wants them, so they're high in demand. So you're paying the market, and that's a really silly way to play options that I've now learned.
And I'm just looking at this.
So you're also down about 80% on your puts that you bought, right?
No. I'm only holding on to. So I'm holding on to 2 SPY puts right now. One expires May 29, 240. The other one expires June 30th at 202. And the June 30th 202 one, I bought it at 776 and it's $3, so I'm down 50% on that.
Wow. Okay, so then it's just the time value of the option is so much more because you have so much more time.
think so.
And you can see how drastically it affects the price, because like my $2.10 put for May 15th, I also bought for $7 or so, but it's now
Yeah.
80 cents. So the
How much is it?
80 cents.
Whoa.
Right,
Look
so-
at, yeah, you're right, huh?
Yeah.
June 30th, May 15th, that's $3. Mine's $3.35. That's what? 4 times.
Yeah, so
It's
an extra
all
45
theta.
days gives you such a strong theta value, right? And that theta decay,
Yeah.
you'll notice if you wait a month and the market goes nowhere, you will lose from $3.30 you said down to 80, right? So that is how extreme the theta decay is over the course of
Yeah.
a month.
Yeah, amazing.
Yeah, really,
And then
really important to know.
the put that I bought yesterday, it's gone down a lot. I paid nearly the highest amount, obviously, because I did the because I did market price.
Yeah.
Uh,
Well, and this is kind of what we've learned from the Amazon trade that we followed the other day as well, which is you don't hold for very long.
yeah.
If sentiment's not in your favor, if volatility is not in your favor over the course of 5 days, you have to exit. And that's kind of my feeling now, is that there's not enough volatility in the market to prop up the option prices more than theta is decaying them. So pretty much now you have to get out of your position unless it's strongly moving in the direction you favor.
Yeah. Yeah, I really hope. I mean, I hope. Yeah, my hopes are that today opens red, and it's quite red.
Yeah.
And then we can get rid of this put. Our puts a little bit.
Yeah.
I mean, your put. Are you gonna try to sell your puts?
Yeah, just the one. So the other ones just aren't worth much money.
Okay.
But we'll see where I'm at, because what I would really like to do is take a new spread position if the market is down. And I have that call and that put. As soon as I get to 120% on either one, I want to sell both and then reposition with a new call and put further out and see if that strategy can work for me going forward.
I probably won't be doing any more spreads. Well, I don't think I'll be doing too many more spreads just because of the margin requirement. You know, I don't like having.
If you're selling, I don't want to sell. What I mean is I want to buy a put, buy a call.
Oh, okay.
Yeah.
That's called straddle, right? You're doing the straddle type.
Yeah, it must be a version of a straddle, yeah.
Okay. Whew. All right, lots of strategies.
Yeah.
We'll see which one pays off.
All right. Well, that's our show. Please remember to like, subscribe, and also leave a comment below and help us out with our strategies so that we can start making some money, because obviously we need as much help as we can get. We'll see you tomorrow.